Hey guys, it's Holly Walther. Happy Friday. This week's update is coming to you from my team holiday retreat at the beach, but I wanted to discuss what happened this week in plain English. Well, we all know the Federal Reserve cut interest rates by 0.25%. Now, this is the third time we've seen that happen this year. And this specific rate applies to banks lending to each other, not directly to mortgages, but it does influence the borrowing costs across the entire economy. So, including home loans over time. But don't be confused. When the Fed fund rate lowers, it's not an immediate response in mortgages. Now, what is important is in making this decision, the Fed was not fully aligned. Some members wanted a bigger cut. Others said no cut at all. So this tells us they're still trying to walk a very thin line. And why is that? Well, they're working on balancing two things at once. One, inflation that hasn't fully gone away, and two, a job market that's starting to cool. So, Fed Chair Jerome Powell made it clear there's no easy or risk-free path forward, which means, future rate cuts are going to depend heavily on incoming data. So let's talk about jobs because this matters for rates. Recent data showed job openings increased slightly in September and October. So on the surface, that sounds strong, but keep in mind, a lot of those numbers are inflated by remote jobs being posted and multiple times at the same time. So when you zoom out, the bigger picture still clearly shows a slowdown. Even in this holiday season, hiring is cooling. Fewer people are quitting their jobs because they fear if they leave, they can't find another one. Layoffs are creeping higher. And that tells us that the demand for workers is easing compared to the last few years. Now, we also saw some movement in unemployment claims. New claims jumped last week, but that's partly because the prior week around Thanksgiving was unusually low. Ongoing claims dropped, but that's likely due to a holiday timing and benefits expiring. So none of this is a true improvement yet. So, bottom line, what does this information mean to you? Well, the economy is slowing gradually, not crashing. We all know by the recent meeting that the Fed is being cautious and rates are reacting week by week to this data. So, as I say each week, if you're thinking about buying, selling, or refinancing, this is exactly why timing and strategy matter more than headlines. If you yourself, or if you're a real estate agent, your clients need any additional information or want to talk through multiple scenarios or strategies, know that my team and I are here to help. And we wish you all a very happy holiday and a prosperous new year.